Hey, good morning, everybody. TGIF. We see Scott Bissett and the impact of him over in Japan chipping his teeth. I think that is the one direction we stand to see the greatest amount of risk today, and it's not showing up on everybody's radar. There is a chart that I like to keep an eye on. It's a little bit of an odd thing, but it's this here US 30 slash JP 30. It generally moves in step with the market. And when it doesn't, typically forces us to look at if it's not moving with the market, what is moving the market, right? Take the ES or the NASDAQ, SPY, the Qs, whatever. We always have to ask what's moving the market. Sometimes it's dealers and sometimes 0-day flows. It could be commodities like gold, oil. It can be treasuries. So we never know, right? We always want to be looking and asking that question. In the daytime, we have the buy right monthly index, but it's not daytime, right? So we don't use that one right now. But if it's options that are moving the market, then we'll see the buy right taking control. And if it's treasury, then we'll see treasury in step. So last night we had this move to the downside. We can see that it started around 8 o'clock, big dip down, and then it recovered and ran back up and broke the Globex high for a new high in the overnight. Take a look at what the S&P did last night. Start at around 8 o'clock. Sure, a little bit of dip, and then it recovered, breaking Globex high, making new highs, new lows, higher lows, and it didn't do the same thing, right? So this was a move coming out of Japan last night with Scott Bissett and maybe some headlines, but the S&P shrugged it off really quick. So now it's down near the Globex low, and US 30 JP 30 is not down near the Globex low because it had this big move way down here last night. That's why we're starting a bit late. I was trying to figure out what was going on and what we're going to get out of it. There's always a catch up to it at the end. Now we're kind of getting back in step if we just, zoom into, say, this part right here. We're moving down, right? But it lines up. If I match my mouse, it's more of just this. Mouse on the left chart here matches this candle, and we moved together down. So maybe we're getting back in sync, but this discrepancy caught my attention. Just trying to dig deeper into it. Don't have an answer to what's going on yet, but out of everything that we could get on the docket today and the subtle, quiet shenanigans that happen in the background, keep your eye on Japan today. You got the JGB 10-year that you can use. US dollar Japan is always a good one. US 30 slash JP 30 is another one. Kind of keep your eye out there, right? Anyways, happy Friday, everybody. So markets are basically flat this morning with small caps up the most, not even 0.25%. Japan is down, but not by much, not even a quarter. Hong Kong up the most, a little more than a quarter. We got nothing, right? We got a whole market waiting on nothing. Looking for something. This is one of those kind of give me an excuse type situations. It is OPEX, right? When you think about this, if you're not familiar with options, it's always the third Friday of the month. So it's pretty simple to keep track of. It's always the third Friday. If it happens to have a holiday on that third Friday, then OPEX will be the day before, right? Because we have a holiday and we're not here. So otherwise, it's always the third Friday of the month. we've been keeping our eye on that OPEX because that has been the structure that developed these guardrails around the price in this range that we've been fighting all week. Well, we managed to break that range last night, but as anticipated, it didn't stick, and we're already coming back in again. Now, we don't have to come back in, but the expectation was that we were going to end the week in the range, and next week we were finally going to finish with this range and go somewhere. Really know where that new place would be, but not here, right? Just like the old song, we don't care where you go, just GTFO, and you can't stay here. We are going to get a little bit of housing data, building permits. This ties in with what we keep hearing out of the president, slamming Powell for not cutting and complaining about how housing is expensive and borrowing rates just too high, blah, blah, blah. So it's just going to feed into that whole thing of, Powell's not doing his job, which we continue to hear more and more in the administration hopping on that bandwagon, seeking anything that they can find to put pressure on him to do what the president wants or get out of the way so that somebody else can do what the president wants. We're going to be done with our data by noon, so we have a free afternoon for anything else that might come in and cause us grief. It will be surprise headlines, right? It won't be something on the economic calendar because we don't have anything this afternoon on the economic calendar. Well, we've got the commissioner for the IRS being sworn in. It's possible that there's a little bit of a Q&A and that he might be chipping his teeth either before the event or after he participates in the event. So there's a possibility of media exposure there. So watch the clock at 1:30. We could see something. And at 2:30, there's another event. So maybe he talks there. Looking at some of the stocks that were up in the pre-market, the high volume stocks that are up in the pre-market, and some China names were popping up in there. So we're getting some flow out of that. And then, of course, the usual suspects, NVIDIA getting high volume this morning. Tesla's moving around in there, but a lot of it was China. There was a little bit of drone and some quantum in there, but mostly it was chips in China. The put wall was rolled just a little bit lower. If you look at the spot gamma stuff that I post every day, the call wall stayed in the same spot. The put wall moved just marginally lower. And not that it really matters, but it does put it underneath the 10-week completely. Before it was kind of really close to the 10-week, and now it's just straight up underneath the 10-week. So the idea that we could fall below that put wall by the end of the day is slim to none. And same with the 10-week. The idea that we could close below the 10-week today, while technically it is possible, it's really unlikely. While I'm not a fan of trading those far out of the money credit spread plays, having something like that to focus on as a structural level, I'm sure gets somebody's attention. Otherwise, we got the 4-day, 10-day, 20-day, 3-week, all now within this 100-point range that we've been working on. We've finally got all of the moving averages up there because we've hung out here long enough to get that done. Typically, after getting this contact with the 10, we would go ahead and springboard and work our way up from there. But we made contact with the 10 on the 14th. Here it is on the 18th. And we're still within this range or this zone. We just didn't get the follow through that we're looking for. Overnight volume is still the same, sitting at around 50,000, and the norm pretty much. So no surprises there. And you will see a market maker move today because of OPEX, but it's not a real risk, right? Like it's just the way that this thing functions. They're doing a lot of moving on existing positions, moving things that are going to expire today, so out of the front end, and any trading activity in the front end jacks up that vol and causes this market maker move signal to happen. We just have to be mindful of that and realize that there's times where, you know, you're going to see that and it's not useful. We see this on the same thing when the futures are going to change into a new contract, like a triple witching event. That entire week of the event, we see this happen too, right? So there's just times where you have to ignore the market maker move, and today's one of them. Even if there was something really big going on where they were hedging, we wouldn't know unless we just came in and started digging through the trading volume to be able to spot it. So ignore the market maker move today. On that push to the upside last night, we didn't get to the ADR half, and it's very likely on this sideways day, unless we get headlines, that we'll just stay within the ADR range. These two red lines is the distance that the market has been moving over the last 21 days on average, right? When you think about what our average daily move is. So we can exceed the range. That's not going to be a problem. It's not like we haven't done it before. It's just that's what we would expect the market to do, is move within this range, right? The average daily range right now is 58 points. And if you haven't really heard me talk about this before, from the close last night at 4 or the new open at 6, if we look at that 58 point range and we split it in half, then we could go, you know, like 28 one direction, 28 in the other, or whatever it is, 29. And that would be your 58 point range split in half. 58 points between those two red lines. But the market could get bullish and we could move 58 points in a single direction, and that would get us to the top yellow line. Or we could move 58 points in a single direction, say to the downside, and that would get us down to this line. That's why there's 4 lines there, right? But on average, generally speaking, we just move half of that in each direction. And we play the range. If we get to one side early enough, we get a little bit of edge on the idea that, okay, we reached one side, it's very likely we'll go to the other side by the end of the day. But we haven't made it to either edge. In fact, we couldn't even get to the one side. And so we have no indication that we're going to get to either side or which side we would hit first, since we're basically flat this morning and we haven't done anything. We haven't gone anywhere since we opened at 6 o'clock last night. So we got nothing. We are within the IB, the initial balance, one of the things they imply when we are still within the initial balance as we come into the open is that if there was any work that needed to be done, it hasn't been done yet. So that kind of goes with the theory that, a lot of trades that happen in the futures, they're not from speculators like you and me, where we buy low and sell high and we try to profit from the move and we're just speculating on where it goes next. A lot of trading that happens in here is to cover payroll, or it's a part of a hedge on some other trade like coffee, commodities, lean hogs, whatever it is that they're covering, and that they don't really have a care as to if it's going to go up from here or down from here over the next whatever period of time. They're just using it as a hedge or covering payroll or doing something else other than speculating. So they have work to do, right? If you subscribe to that theory, and we didn't see any trading activity last night, that if they have any activity that they need to get done today, then they haven't done it yet. And that we could expect at some point today for them to come in and get their work done. This, for an example, would be a situation where they got their work done in the overnight and they didn't really need to do anything on the intraday. They'd already done it all last night. That's the idea behind it. So if we're within our own IB and they haven't gotten any work done, that we could see that trading activity come in within the intraday and then see them get their work done. So this is the top of the range that we've been talking about all week. You can see we're back to the top of the range. This is like a really big Busby. If it does play out as a Busby, then we would expect to bounce here and take another run back to the high, which is 56. Otherwise, we have our second missed daily pivot. You can see yesterday we never hit the daily pivot. So this is an MDP and it counts for today. So far today, we haven't hit our daily pivot. And so if we make it through the entire day without hitting it on Monday, we would look back and we'd say we had another missed daily pivot on Friday. When we get them in consecutive order, day after day after day, we keep going without hitting that pivot. It shows a particular drive. And if this is the start of the range ending, then this would be an awesome signal that we're on the move and that we're going to begin to expand and get into 64, 64.50, maybe even into 65, because we're making the next leg up. We don't know that yet, right? We don't have our second MDP yet. At some point today, we could come down and break this floor pivot, and then that idea that we're beginning to expand would be null and void, and we would focus on what's below the pivot. We do have to be mindful of how far away we are from the weekly pivot. This is not very far at all. We can get 2.5 to 3% away from the weekly pivot before we begin to think that we're overbought or overextended or that we've moved too far too fast. This is not that. So with 1 day left today and with more than half the day already done, it's hard to see how we would get too far away from that weekly pivot at this point. But if this was earlier in the week and we had this sort of setup, say like Tuesday, we would be worried about getting another leg higher from there and getting 2.5 to 3% away from the weekly pivot. Yeah, if you're new around here and you haven't heard that before, the day's half done, right? We opened last night at 6 p.m. It is past 6 a.m. this morning. Ta-da! Sleepyhead, you slept half the day away. Because of the expansion that we saw yesterday, it should have adjusted the SNR levels. Remember, they've been telegraphing a move to the downside, giving more edge lower than higher. This morning's floor pivot is higher than yesterday. That's bullish. Price opened above it. That's also bullish. And we can see a massive change between the S3 of yesterday and the S3 of today, but not a massive change between the R3 and the today of and the R3 of yesterday. This is telegraphing an upside push this morning. Not by much, certainly, but it's a change in structure from what it has been showing all week. $63.32 cog line is the high from 2 weeks ago. It's the high from last week, and it's what we want to focus on this morning. If we do break back inside that key resistance level that I had marked out from earlier this week, 63.32, it's not some kind of make or break level. It's just the top of the previous range until this week when we came and expanded outside of it. So we had that wick out. We couldn't keep it. We came back in. Now we've had a stronger breakout, and we haven't tested the top of that box yet. So 63.32 is more important than that level earlier this week. Otherwise, the point of control from the last 2 weeks, 63.05, which I mentioned, it was a little interesting that they didn't front run it at like 62.92 cog line or 62.98, something like that. And they didn't hit us right on the round number. It was just beyond that at 63.03 and 63.05 where we really seen the activity come in. We don't want to revisit any of that this week, but that would be the next stop. If we make it through 63.32 cog line and we continue to move down today, that would be the levels in focus. It's what I call yesterday's 111, even though a lot of times we actually get into the 1, 2, 3, 6. But it's a reversal off the previous day's trading range, which a lot of times that's what we get, right? We get a breakout that doesn't stick, and we're trying to define when is this breakout going to turn around and come back in again. And so I mark out that zone, and a lot of times this reversal is a really great trade to play. Now this one happened in the overnight already, so it's already done. It's off the table. But if that had happened, say, into 9:30 sometime today, right? Sometime within today's trading range, then we'd have an opportunity to have played it. But it defines the idea that the breakout has already happened, the reversal already came, and now we're back inside the zone. We're not supposed to get back inside the zone. Once we've broken out of the previous day's range, we're supposed to keep it. It's rare to break out of the previous day's range, lose it, come back in, and then break back out again and break our own previous high and continue to go higher from there. I'm not saying that it can't happen, just that it's rare to do that. Generally speaking, if you get your breakout and you don't keep it, you don't get another shot at it that day. So if we do get back outside the box, we'd have to ask first, how did it happen? Was it off a headline? Was there some sort of news? And looking at the economic data for today, we could get a little bit of something at 8:30, sure. And there was something at 10, but otherwise, we don't have anything that can really propel us. We're going to need something else. 0-day flows, dealer hedging dynamics, Mag 7 headlines, something that can juice this thing and get it back out of the box. If we don't get that, there is a 786 level worth marking out. As long as we're above that 786 level, we have the capacity to run back up into these higher levels. But we're back below 1, and that gives us license to aim for 786. And if we get below 786, then we've got the half. And we can't target 1.0 or the 111 up here because we're still below 1.0. So that's off the table until we get back above 1. Notice the 786 is the 6332 cog line. Imagine that, right? How it all just comes back together again. 10-day, 30-minute volume profile and TPO, they're just about lined up. They're about as lined up as we could expect. And it's right into that 6311 cog line, 6305 area. This would be a pretty significant zone, and I don't think we would be able to get through there very easily at all. It's worth noting that the value area on the TPO looks completely different than the value area on the volume profile, which is covering everything. That would explain why it's covering everything. Thinkorswim, with all its wonderful wisdom, likes to mess around once in a while. So that looks a little bit better. We still have a lot of trash on this side that we don't have here. So this is more of the classic B shape, and this is more of the classic distribution. But it's by no means clean at all. It's still a big mess. This point of control is not going to move anytime soon. There's nowhere for it to go either. So that level is going to be there for a while, at least a week, if not more. One was changed. I'll bet the other one was too. I don't know if they did like an update to the indicator or what they did to that. We still have the VPOC from Wednesday. We don't have a new one from yesterday since we opened right at that spot and we chopped through it. The textbooks would tell you to carry it forward anyway. So if you wanted to, go ahead and knock yourself out there, along with the value area low and the value area high. What is interesting is we have this sort of a crown shape. Of course, it's on its side. Triple distribution zone. So they put in a lot of work up here, and they've put in a lot of work down here. And of course, we spent most of our time here in the middle, and that's where the point of control is. One of these is going to break, right? Whether it's the high side or the low side, one of these two just is going to give up, because we can't, well, technically we can, but it's nearly impossible to think that we can stay in this tight little range, this 16-point range, through the entire trading day. If this was before COVID, yeah, because, back before COVID, the entire 24-hour trading period typically moved less than 40 points. And between, say, 9:30 and 4, if the ES made 20-point moves in the entire day, we were really happy about it, right? Typically, you'd get like a 8 to 12-point trading day. Imagine that, right? Trying to eke out a couple of points in profit in the ES through the entire trading day, and it didn't even move 20 points in the whole day. And that was the norm. That wasn't, some standout, wild, crazy day where we didn't really move. That was just every freaking day. So if you were not trading before COVID and you're getting used to these 80-point days and 100-point days, just keep in mind someday we will be back in an environment where our entire trading day is less than 50 points, less than 40 points, which is why even when it wasn't popular back then, I was trading the NASDAQ. Now everybody trades the NASDAQ. So we are working our way back up away from the 10. We came back and tagged it earlier this week, but we're within this zone and we're not looking for some sort of bounce move push away from the 10. We just expect to hold within this range until we get some sort of catalyst that gets us away from that 10. We're in a good, solid, safe place. There's nothing wrong with our positioning. We're above the 10 in a healthy way, and we got here safely, so there's no concern. If we had gotten back here, through some very swift move in a single shot, that would be completely different, right? That would be an issue for concern, but that ain't the case, so everything's fine. Nothing to see. And for the 10-week, now we're just below 4%. So it's still a little elevated, all things considered, but we've been higher than this before. And the main concern is how we leave this range. It can happen really fast, and we end up with this significant drop. Moving 4% towards the 10 in a single day is pretty violent. And that's what we don't want, right? You can see back here how in a single day we moved swiftly back towards the 10. That's the 10-week. So sure, we're a little extended, but we're not to the point where we think it owes us any sort of mean reversion. And how we open Monday is going to be really important so that we don't end up with a situation where we were this high one day and the next day we're all the way down there, back at the 10 in a single shot. That's what we want to avoid. So at the most, we can look at this and say, yeah, we're a bit extended. It doesn't owe us any sort of mean reversion yet. And our biggest threat is that we could gap down Sunday night and open Monday really close to the 10 after a very swift weekend move. And don't get me wrong, I'm going to be shopping around for some really cheap butterflies around that 10-week. Not in the ES because the futures don't do well with what they call, quote, complicated options trades or complex options trades. It doesn't like multi-leg strategies like iron condors, butterflies. The futures options, they're just not good for that. But SPX, SPY, QQQ, I would be shopping around for just something really cheap at the 10-week, because why not, right? If you can risk 2 or 3 pennies to make 75, 80, that's a really nice risk reward. It's about as cheap as getting a gas station lottery ticket. We do have next week's range projected. Just remember that it's not set in stone yet. So what I mean by that is when we look back, we got all of these weeks. Those lines are set. They don't move. even the week that we have this week, our lines are set, they don't move. But this new range, it's not set yet. It's still alive and it's still moving. The midpoint of that is our current price. So as the ES moves up and moves down, so does that gray line. And so do these two lines that are encompassing it. So throughout the day today, the ES is going to move up and down, and this thing is going to shift with it up and down. And the volatility calculated for next week is going to increase and decrease, ebb and flow. And the width of this box will shift through the day today. Tonight, after the close, it'll get locked into place, and that will be next week's range. On Fridays, what I like to do with this range, even though it's not yet locked into place, is compare it with the week that we just had and sort of get an idea what's on the docket for next week. Now, I just did it, and they're not much different, right? Maybe just a little bit more volatility is being priced in for next week than we have for this week. So no real shock and all surprise. But it would have stood out if we came in and it was twice as big as the current week's range, or half as big as the current week's range, right? If it was really narrow, that would have given us a heads up, or if it was just really, really big. It's neither one of those. It's just about like what we have now. So, there's really nothing to it. But we wouldn't know unless we looked. That's the whole point. And throughout the day today, something could come in that really shrinks it up or expands it. If you're not using Thinkorswim and you don't have this, say you're on IBKR or something else, you can get it yourself. You can just go in and draw it by hand. So go into the options chain and look for next Friday's expiration after the close, right? Don't do it right now. That won't do you any good. After the close, you'll want that number. So wherever we close at, you'll take that number and add it to the close. That'll give you your top sideline. And after the close, take that number and subtract it from the close value, and that'll give you your bottom sideline. And that'll be your next week's range. And it's a static level, right? It's done. You mark it and that's it. If you want the dynamic level, you just come in every day and you get your plus and minus for the day. Dynamic, static. Thinkorswim put in that new update now so that when you build your watch list columns, you can save the setup so that if you open another watch list, you can just immediately apply the saved settings. Finally, right? After what, 30 plus years, they finally give us that feature to save the watch list column settings. Yay. So I was playing around with it yesterday. Right here, by the way. On the watch list too. So looking at what's down this morning, at least 0.5%, nothing. I guess maybe that's too generous. The Mag 7 collection that we use is down that much, and that's it. Nothing else. Looking at what's up this morning, at least 0.5%, really not much there either. We got the ARC junk, China, which we already knew about, and uranium and gold miners at support. That's it. Like that's it. A little bit of energy. Nat gas, which is a joke. this is really screaming that it's going to be a sideways day unless we get some sort of catalyst that kicks us out and gets us going. And there's the rug pull signal, right, that we talked about earlier this week. This would be a better example of it, where, you know, we close here and we open gapped up, and then we get that run and make a loop to the downside like this one. That one didn't really fall that much, but it had the gap up. We were looking for that earlier this week, and, you know, we didn't really get the follow through as much as I would have liked to have seen it. Where was that gap up? It doesn't matter. So got to just let it play out. Crude up the most, then China, nat gas, China again, energy, miners, energy again, silver. So we got precious metals, energy, and China, and pot stocks. You don't want a rally day on pot stocks and nat gas and casinos and cruise lines, and that's not what we want a rally day built on. It's not sustainable. So look for this to broaden out a little bit. If it shows the Mag 7 is up a little, if we can get that to spread out into more legacy tech, maybe spread out into chips, communications, cloud services, something like that. And it'd be good to get a little bit of finance in there. Banks, especially after the earnings week kicking off, then we could see, you know, a nice continuation today. But otherwise, I really think we're going to end the week sideways and start everything off wild next week. In fact, I really hope that's the case. That would give us some really cheap butterflies. If we start making big moves today, then the butterflies won't be so cheap. We got nothing, guys. GTFO, we got to get out of the box. That's going to be the number one thing to focus on. So we got our own Globex range. Start with that. If we continue to hold inside of yesterday's range, then focus on the halfback. And then, of course, if we cut through that, then focus on yesterday's RTH low and then yesterday's full low, two different levels. And just on down we go, right? Level by level by level. Otherwise, don't fight the system. If we break back above 63.50 and we can break our own Globex high, then, hey, we're breaking out and we're running. Take out the 1, 2, 3, 6 and keep on going, right? There's no reason to fight it. Just because we're not supposed to break out and expand doesn't mean that we can't. My expectation yesterday is that we would have wick out and we would come back in before we even closed, which we didn't. We got up there and we held it into the close. And now we're holding this breakout. So, you know, this continues to just stay up there even beyond all reasonable expectations. So don't fight it if we do get that breakout. We could see 6,400 by the end of the day and we wouldn't even be outstretched. It wouldn't even be considered an outsized move. So what I got for you guys, be careful, be safe, enjoy your weekend. I'll see y'all next week.